Hey, welcome back to Two Super Guys Trade Stocks. I am Dylan.
And I'm Vinny, and today we're going to talk about the absolute complete mess that we've somehow found ourselves in the last week. Michael Burry tweeted about a couple times. We talk about how epic this is in terms of the size of this whole problem and how it can affect some more mainstream companies that you may not know about.
Two stupid guys trade stocks.
Yeah, do you see this background chart? We're going to talk about it again here in a minute, but it's quite an interesting shape, isn't there?
Yeah, I mean, it's definitely not good. I think it's probably frowned upon.
Yeah, just a little bit. So
Oh
I saw
boy.
this meme on Wall Street Bets, and I had to include it. it's just too perfect. Because this is ultimately what happens when you have tightening monetary kind of environments. There's that famous Warren Buffett quote where he talks about, when the tide goes out, you see who's been swimming naked all along, and it turns out Silicon Valley Bank is the most recent large person that was swimming naked. I guess.
So the big thing there is what's behind Silicon Valley Bank, because according to Burry, there's someone else. So
There's always someone else. Yeah, that's what his tweet basically was about. So it's possible we found our Enron. All right. That was his tweet on March the 9th. All right. And then he followed it up the next day with next we find our WorldCom.
oh
Patience.
jeez. Oh my
Yep.
god.
So it's like, well, we've had the first kind of like major kind of financial institution that's fallen as a result of this kind of tightening economic cycle, and now we got to see what sort of cracks that precipitates otherwhere.
And I'm sure
Uh,
he is probably short as hell in some way. He's got options of some sort.
who the hell knows at this point? That his next tweet was about some sort of social justice thing. So like I don't know.
Hmm.
But you ever read the book The Smartest Guys in the Room or
No,
seen the movie? They made a movie.
I
So
did
it's the
not.
story of Enron. It's actually it's worth reading the book. It's a pretty small book, somewhere behind me. But anyways, the whole idea was big accounting fraud, right? They were hiding losses. They created these subsidiaries that they owned wholly, and they put the losses in these subsidiaries. That's like just hiding it. If we just created these little shell companies and like, oh, that loss is over there. It's cool. It's not us actually. Um,
I
they
actually
ended
do
up
that,
finding,
so that makes sense.
yeah. Yeah, I mean that's how everyone does their taxes.
Yeah.
Their peak market cap was 70 billion, so decent sized company, not absolutely enormous. They did have a PE of 70, which was interesting to me in hindsight here. How what's the word, frothy the kind of perception of Enron was at the time, and it was just all accounting fraud.
Yeah, I mean, 70 billion also back then is not a small amount. That's pretty big.
True, exactly. And they filed bankruptcy December 2nd, 2001. All right, .com crash.
Mm.
This is a nice stock chart for you. Just given the fact that this week we're seeing so many of these precipitous decline stock charts, this kind of felt like it's belonged here.
Honestly, it took longer than I would have thought because that's over a year.
Yeah, there's always the questions and the crisis of confidence, and then ultimately everything comes to a spearhead. And next thing you know, the company's filed for bankruptcy.
Yeah,
They got downgraded.
the last two
Yeah.
months were pretty fast.
Exactly. So WorldCom was the other kind of major headline financial collapse of that .com bubble crash era. The bankruptcy filing date was July 21st, 2002. So you are talking about a fair amount of time that passed between when the Enron fell and when WorldCom fell. That's why he was saying patience. Patience, okay. Their major kind of accounting fraud issue was something called prepaid capacity. Basically, they were putting things in their balance sheet as an asset, saying it was like prepaid capacity, but it was complete garbage. No, didn't really exist. And they actually, I forget who the person was in charge at WorldCom that in the interview. They're like, so what was this based upon? He's like, well, I based upon the margins I expected to make.
Oh, jeez. Okay, that's fantastic.
Yeah, so they that overstated their income by 3.8 billion, which when you're looking at a 186 billion-dollar company, it's not exactly a huge proportion, but it was enough to cause like crisis of confidence, and then they got their credit rating was downgraded, and they had it basically like equivalent of run on the bank, whereas the stock just kind of obliterates and sells off here.
Well, yeah, they probably weren't guessing that there was going to be a big crash. They were probably counting on perfect market conditions for that 3.8 billion.
Yeah, exactly. So when you get these tight economic cycles, it's a lot harder to hide things that you've done that probably shouldn't have done to begin with. And that's really what highlights during these times, right? So, these are the headlines we're seeing this week. 2 U.S. banks collapse, and we wouldn't even talk about the Silvergate one, which is crypto tied. We're going to do this entirely separate video on crypto, which is definitely an interesting little
It is
nugget
terrifying,
right
actually.
now.
Yes.
Yeah, exactly. But this is a chart that I was like, damn. This is actually from the Wall Street Journal, and it just came out today. The basic idea here is you're showing the total value of all the assets in these banks as they go bankrupt. If you remember back to 2008, like the biggest one in history was Washington Mutual. We've already had now Silicon Valley Bank go bankrupt this year, second largest bankruptcy in U.S. history. And this, look at the comparison of size there. We've already had more assets go bankrupt this year than any other year but 2008.
Yeah, and it's also just getting started, which is the problem.
Yeah, it's scary, no doubt. Absolutely, absolutely. So the other interesting twist to this, so this actually I got from a poster on Reddit, but basically the FDIC is a Federal Deposit Insurance Corporation, and they insure individual depositors up to $250,000, per institution. Right. So the proportion of people that are insured versus not insured will give you an idea of how affected people are going to be by this, I guess, if you will. Are they going to be made whole by the FDIC? And if you look at this list, this is 100 banks here. SVB is right down here. 2.7% of the most recent quarter had below 250,000. I know this is an annoying chart. You can barely read the damn thing, but 2.7% is what it indicates. Yeah. So that'd be 97.3% of people or that had money in SVB that are not going to be made whole by the FDIC bailout.
I actually know one.
Yeah.
Yeah, it's a
Yeah.
buddy works at a tech company.
Oh.
And Kathy Woods. Buddy works at a tech company. All their funding came from SVB.
Oh, wow. That's a little scary. So the reason why I mentioned Crushy Wood here is that Roku came out and said 26% of their cash was with SVB Financial. So yeah,
emotional damage.
Exactly. I already made money going against Roku in the past, so I don't know. Maybe I have to do it again. This was funny to me too. Jim Cramer, do you remember like what he's famous for with the 2008 financial crash?
Didn't he eat cat food, like on
Yes,
screen?
that did happen. But
Is
he
that
also
what
made
it
one of
is?
the worst calls in history.
Oh,
So
well, that's
just
not
put this
new.
tweet out. J.P. Morgan is a fortress. Okay, maybe,
So they're next.
no.
We
Yeah,
just found out.
I know. Right. Well, here you go. Do you remember this? So he tweeted or said on the show 5 days before bankruptcy was filed by Bear Stearns, or I'm sorry, they were bought out by I forget when I ended up buying them. But 5 days prior to that, he's like, they're fine. Just don't take your money out. They're totally fine.
How does he still have a show?
I mean,
I mean, that's like the most condemning chart I think I've ever seen.
I know it's pretty ironic. So it's like him now saying this about JP Morgan. JP Morgan should send a cease and desist letter to his house saying like, "Do not talk about
Yeah,
us."
I would. That seems fair to me.
And then, of course, when times get really wild, what happens, right? So this got posted on Friday. This is basically Federal Reserve is having an emergency meeting on Monday at 11:30 a.m. In order to kind of discuss the evolving situation here. Really, I'd bet that what their discussion point is going to be is, what is the risk of financial contagion? Like, how likely is this to happen? Where would it spread next? What sort of do they need to do anything in order to facilitate, a transaction, a company getting bought out? And then we're not anywhere near like TARP level actions from like 2008, but this is definitely something where the Fed will be involved in talking to financial institutions to make sure that they are sound, and if need be, that they can help broker a sale so that they don't have to just get shut down like SVB did.
So this is pretty significant because after his speech, everyone was thinking. Before the speech, everyone was thinking that the March 22nd rate hike would be 0.25. Okay, after the speech, that switched a little bit to more people think it was going to be 0.5. Now, here's the problem. The higher interest rates are hurting banks. They're hurting cash reserves because so many people have I think I had looked it up before this. It was like 85 to 99% of mortgages are below current interest rates.
Okay, yeah, they're all
So
fixed.
yeah,
Yeah, in the
yeah,
United States at least.
it hurts their bottom line. The problem is we need the 0.5 hike if it's necessary. So do you hurt the entire economy to give a little bit of a Band-Aid right now? And do you create problems down the line? Or do you do a 0.5 hike and possibly push another thing over the bridge? It's not an easy situation.
I know. Well, there were even people online calling for a 1% Fed funds rate cut.
Cut?
I was like, the
Those
business
people
end
have
of their
short-term
crack pipe
calls.
was hot. That's all I can say. Okay.
Yeah, those people have
blowing.
2-week expiring calls or something. That doesn't make any sense.
Exactly. But no, it becomes a very real concern. And you did see that the options market kind of now is pricing a 25 basis point hike for the next meeting, as opposed to the 50 it was pricing in like a matter of a few days ago.
Yeah.
Affected that greatly because, you're starting to see some cracks, and, you kind of want to know, like, how deep is it going to go? And, the U.S. consumer has been dealing with inflation for 3 years now, but bank failures are something that we haven't seen on a large scale since 2009, basically, right?
Yeah.
So it's very different tolerance, if you will, from a public perception standpoint.
Yeah. Now, I do think that this is a unique scenario. I don't think this is going to spiral out of control. Silvergate had unique crypto exposure. It's different. SVB also was backing a ton of venture tech companies that are unfortunately burning a shit ton of cash. So there's not a lot of banks that are like that.
Yeah. Yeah, completely agreed. It's definitely interesting. So, and this is one other chart I want to throw up here was bankruptcies. We are talking about kind of, the major headline ones, but overall, we did start to see them creep over the last, few quarters here. Still a long way to go. I don't know if you want to slide yourself over to the side there. But like that's the basic idea, is that we're starting to put in a bottom and make our way back up. Still have a long way to go to even get back to where we were in the early pandemic. It kind of ages, but it definitely is a sign that tightening monetary policy is having an effect on weakened financial institutions, and that you're starting to see some culling of the herd, if you will.
Yeah, no bueno. Go to the this is XLF, right? I had to zoom out like super far to actually see where this was. This is over the course of 2 years. You can see we dropped from like 38 to 33-ish. It's not a huge drop in the grand scheme of things. There's a lot of banks that aren't even, I mean, they're moving, don't get me wrong, but they're not SVB moving. All right. Yeah. Go to the next slide for me. So this is 2008. All right. You can see in 2008, this is the entire crash from top to bottom on the screen. The green line here is the trend line that was drawn at the time. Okay. You can see that we did break above that trend line for about a month and a half, right? We then went down, retested, and just utter crash, just utter nonsense. Go to the next one. So here's where we are, all right? We're kind of having a similar situation. We stayed, we butted up against that trend line multiple times. We popped above it, and now we finally dropped below. We're hanging out about 384, 385. I will say, I did a video Friday, and I said that we're going to hit 370s within a couple of weeks. One trading session in, we're 5 points away from 70s. I'm throwing that out there.
That's very true. That is very true. I thought it was more aggressive. I thought we were going to have a little bounce back because it kind of got an outside of expected move, but apparently not so much. But
all eyes are on this meeting. This is going to be iffy, so everyone be safe. I don't know.
Yeah. Pre-lube your rectum.
Pre-lube your rectum. That's our ending words. Have a good one.
Yep.